It is Crop Progress Tuesday. Mark Oppel. Again, our thanks to our friends at AgriLiquid, St. John's, Michigan. And let's take a look at talk about crop progress national summary here, looking at corn, soybeans, cotton, sorghum, and others here. Kind of a broad brush view of these crops here. Looking at corn conditions nationwide, 64% rated good to excellent, down 1%. Soybeans down 1%, 61%. Cotton down 1%, 60% rated good to excellent. No change in grain sorghum at 63, and rice down 2%. That's kind of, again, taking 5 major commodities there and looking, by the way, the spring wheat numbers were the lowest for this week in July since 2006. And with that, we head to Chicago and look at a higher trade and visit with Todd Horwitz. Bubba Trading is bubbatrading.com. Yes, sir. Salute to you as well. Happy Tuesday.
Happy Tuesday. Let's go to St. John's, Michigan.
Let's go. Yes, we always promise to go there. We're going to end up there someday together. All right, grain trade, adding the weather premium right back in today, Todd.
Well, Mark, I think, you and I talked and, kind of communicate during the week, and I thought that we were down at a level of support. I figured we'd see a bounce. I'm not thrilled with as fast as this bounce just came back. It came up overnight very quickly. It's good, and I like it, and I'm still looking to be a buyer. I think we'll probably see possibly some selling pressure from here. But again, those are just, to me, these are opportunities to buy. Every pullback now is an opportunity to get in and buy more, because I think we're going to see higher prices. I still think we're going to get that $4.50 to $5 in corn before it's all over. I mean, again, I'm looking for a lot of things happening, and we're seeing we might start to get a little help from the outside markets as well. So I think that overall, I'm still extremely bullish here, and my one concern remains soybeans, but they've been able to manage to hold pretty well. But $10 is the key level there. All
right, let's take a look at the futures then. We'll talk a little bit more about those outside factors. Corn up 7 to 8 cents now. December, $3.96.5, right back toward $4. You mentioned soybeans, and beans double digits all day, now back over $10 rather, all except August. And it has been over 10, but now $9.99.5. November new crop at $10.12 and then our wheat trade higher in Chicago. We are up 4 to 5. Kansas City wheat futures with July now off the board is up 5 to 6. And Minneapolis, of course, we know the issues there, up 21.5 in Minneapolis. Todd, you mentioned some of those outside factors and the dollar. What's going on there that we're the lowest here since last fall?
We're the lowest in 15 months in the dollar, and of course, this to me looks like the final, what we would call capitulation. This looks like a lot of panic now selling the dollar. If you look at the euro currency, which is the biggest component of the dollar index, that's making 15-month highs. So it's been really pretty ugly here, but I think that was what we were looking for. We called for 94 as a low. I think we're going to now find a base here, but you see oil is even though higher, did not go as high as you would think it would go on this kind of move in the dollar. Gold did not go as high as you would think it would go on this kind of move in the dollar. So I think a lot of the money is waiting, and as it will come out of the equity markets, I think it will go into the alternatives, which would be, in my opinion, the grain space. I think that's a great space that they look for. So I think that's what we're setting up for right now, and that's, I think, where the extra buying power will come from.
Real quick before we leave that crude oil, back to that chart there, those future, and we mentioned this, want to get your thoughts, how they're so closely tied top to bottom, $46, $47 a barrel, all the way through the end of the year.
Yeah, I mean, they're just telling you that they're all waiting on what Saudi Arabia's going to do in OPEC, but that doesn't mean anything. They're going probably to 40. That's been my target all along, and I think that you've seen that the manipulation from OPEC has not been able to rally it. It's down 20% since they started. I think we go down to 40, and then I think that's probably going to be the near-term bottom.
So if you're a producer out there looking at gasoline, diesel fuel, sounds like from Todd Horwitz, you want to wait, do any pricing here into the fall.
No, I don't want to do pricing here. If I see a change, obviously I will say that I think we should now, price in. But I think you have more to go down. We were talking about pricing at 53, at 51, at 48. I think we go back down. I think we had 42 as a low. I think we get down to that 40 level, and then I think we look to price in some stuff.
Very good. Todd Horwitz, bubbatrading.com. What you can expect every week when he's with us. We're not done. We'll come back and talk livestock. Todd Horwitz live from Chicago after this. And we are back to Chicago and Todd Horwitz taking a look at the livestock trade. Todd, with the higher grain trade, we're seeing pressure in the cattle and even more in the feeder cattle here. Is that a direct correlation to the grains, or is something else going on we don't know about?
Well, I don't know. I don't think it's a direct correlation, but you know me, I look at each thing individually, right? I'm not saying I think that they're going down because they're going down. I think that they're overvalued at the moment. I think they need some more selling pressure to meet the downside objectives that we were looking for, and I think that's what's going to happen. And again, these rallies are not strong enough, and you can kind of see as you watch the money flow that they're really not strong enough to hold. And of course, here we come back down again, and it was pretty evident because people were starting to panic a little bit that the prices were getting too high. The ones that wanted to make sure they cover, and I go, make sure you just hedge out and cover where you're at. But they look like they have a lot of room on the downside, and I think feeders have the most room on the downside. I think 140 is in place still.
140 in feeders. We're down over $3, heading to that $4 level. August down $3.77. I'll get the numbers here for cattle and feeder cattle, but down over $2 in live cattle, down over $3.50, heading to $4 declines in live cattle. And the hog trade, last look, they were higher. Now they've turned lower here as well. Not much, but still above 80. We lost that July contract yesterday.
And that will bring us, I think that will be the trick that finally puts us low. We saw Friday, we got below 80, right? And we got popped above it, but I think now you're going to see a run down to probably the 73 to 75 level before this is over. Again, there needs to be selling, and if you look out in the futures, we always like to do, the overall backwardation that's going on is pretty heavy. So we can expect some selling pressure to come in here.
Now, if you haven't done anything yet here and you take advantage of what's left here on the August and October futures,
well, I think you always should, Mark. I think it's something that you should make part of your plan when you're putting your marketing plan together. Is I need to make sure that I can lock in my costs. When I get to a certain point where I know that I can lock in a profit and not have to worry, it doesn't mean you're out. It means that you're now protected there. But if they keep going higher, we do things that allow you to play in a big market if it happens. So you never miss the upside. What you certainly do is you protect from the downside, which we know is part of markets.
Very good. And they can go to bubbatrading.com to learn all about that and maybe put something together for them. Todd, thanks for your time.
Absolutely. Thanks, Mark. Have a great day.
You bet. You too. We'll have you back tomorrow. Todd Horwitz, live from Chicago. All right, as promised, here are the numbers. They are lower now. Live cattle, feeder cattle, and now lower. They were higher early for hogs, but they're now lower as well. We'll start with live cattle. August down $1.80, 115.15, 115.15. The low today, though, below that, 114.78. October live cattle down $1.84. They're now 116.78. Their low today, 116.45, so not that far off of their low of the day. Feeder cattle down about double that in some cases, near that. August feeders are down $3.64, 150.78. September down $3.58 at 150.80. So again, more pressure there, over $3.50 drop in the feeder cattle. Hog futures were higher early, 10, maybe 20 points. Now they're down about 8 to 10 points. August hogs down 8.70 or at 80.70 right now, and October hogs down 10.67.95. Still have that big spread between August and October, and now we'll see what happens. Todd said no, July off the board now, Christina. So August takes over, and that'll be very key to see where it goes.
Starting to see that volatility back in the hog market. We'll keep watching. Markets editor Mark Oppel, thank you.